All right, let's get into it. Today we're talking about a really interesting Singaporean government scheme that could honestly be a game changer for your business. It's called the Uplifting Employment Credit, or UEC for short. So if you're a business owner out there, I've got a question for you. What if I told you there's a way to grow your team, get a little financial help from the government, and make a genuine social impact all at the same time? Sounds pretty good, right? Well, that's pretty much what the UEC is all about. So let's start with the basics. What exactly is this UEC? Let's break it all down. Okay, so at its heart, the UEC is a government wage offset program, but it has a really powerful mission. It's designed to support employers, like you, who hire ex-offenders. The whole point is to help them get back on their feet and reintegrate into the workforce. It's a win for them, a win for society, and, as we'll see, a win for your business too. The whole scheme is actually pretty clever because it has two main goals. First, it gives you, the employer, direct financial help by covering part of your new hire's salary. And second, at the same time, it creates real job opportunities, giving ex-offenders that crucial second chance. It's a really smart two-for-one kind of deal.
All right, so you're probably wondering, am I eligible? Let's get into the nitty-gritty of who actually qualifies, because there are rules for both the business and for the employee you hire.
Okay, so on your end, as the business, it's pretty simple. You just have to hire an eligible ex-offender and, of course, make sure you're making those mandatory CPF contributions on time. No surprises there. Now, for your new hire, they've got to be a Singapore citizen or a PR, and they need to be earning less than $4,000 a month. And here's a key detail. They need to have been released within the last 3 years. It's also really important to know who doesn't qualify. So, for example, you can't use this to hire yourself. That means it's out for sole proprietors, partners, or shareholder directors paying themselves. It also doesn't apply to folks like hawkers who don't have a UEN, or to government agencies and businesses that aren't registered here in Singapore. These rules just make sure the money goes where it's truly intended. Okay, we've talked about the who, now let's get to the fun part, the how much. This is all about the money. How is the wage offset actually calculated? And what can you expect? The big number you need to remember is 20%. The government will offset 20% of your new eligible employee's monthly income. That's a pretty nice chunk of your wage costs covered right off the bat. Now, there is a limit, of course. The maximum you can get is $600 per month for each eligible employee. This just helps keep the scheme sustainable while still giving you some really solid support. And how long does this last? Well, the UEC has your back for the first 9 months of employment. That timeline is really strategic, you know? It gives you a good, stable runway to get your new team member trained up, settled in, and really become a valuable part of the team for the long haul. Now, the math here is interesting. It's not just a flat rate for everyone. See, for employees earning up to $3,000, yeah, it's a straightforward 20%. Easy. But once you get into that bracket between $3,000 and $4,000, the formula actually changes. It kind of tapers off the credit as the salary gets higher. The whole idea behind this tiered system is to make sure the most help goes to those earning a bit less.
Okay, so let's get practical. How do you actually get your hands on this money, and when does it show up in your bank account? Let's look at the process.
So, this is super important. There are actually 2 ways you can get the payout. If you work with official partners like Yellow Ribbon Singapore or ICOS, the whole process is automatic. You don't have to do a thing. But for everyone else, you'll need to submit a manual application. And if you do need to apply manually, don't worry, it's just 3 simple steps. Step 1, hire your employee. Step 2, send in your application online through the IRS portal. And step 3, this is the one to circle on your calendar, make sure that application is in by January 31st of the next year. The whole annual cycle is pretty consistent, which is nice. So, you hire someone anytime in year 1. Your application for that person is due by January 31st of year 2. And then you'll see the payout in your bank account around May of year 2 through Giro or PayNow Corporate. So yeah, there's a little bit of a wait, but at least you know exactly when to expect it. All right, we're almost at the finish line. But before we wrap this up, we've got to go through the important fine print. You know, the stuff about taxes, rules, and what happens if there's an issue. And of course, here's the question every single business owner is thinking. Is this money taxable? And the answer is yes, it is. IRS sees the UEC payout as taxable revenue, basically because it's helping you cover your operating costs. So you'll need to remember to declare it on your company's income tax return. One more thing, the
The government is, understandably, very serious about this scheme being used correctly. IRS put out a statement making it crystal clear that they will investigate any attempts to abuse the program, and that could lead to more than just losing the payout. We're talking about potential penalties and even legal charges, so, just play it straight.
And well, that's pretty much the long and short of the UEC. We've gone through what it is, who it's for, and how it all works. And yeah, the financial side of it is definitely a plus. But it also makes you think, doesn't it? It kind of brings up this bigger question. What's our role as businesses, beyond just the numbers on a balance sheet, in creating a society that's, well, more inclusive? The UEC is one really powerful way you can actually answer that question with action. Thanks for tuning in.